this effort, my turn to own. That is so personal because they're talking about you. Every single individual that's on this call today, it is your turn to own. It's your divine time to go out and possess a piece of the land and become a part of the vast minority of individuals that take the opportunity to become homeowners and property owners. So congratulations and thank you all for being here today. I'm super excited because as a real estate professional, I believe that it is paramount to position myself to work with experienced lenders who can help get my clients to the finish line swiftly and peacefully, right? And accurately, and provide them the best that they have to offer. And so today we are bringing to you a bunch of three of our lenders, three of the top lenders in the state of Illinois that are really going out, working very hard to dedicate themselves to clients to help them understand the mortgage process. And today I would like to start to just first introduce you to the panel that's going to be speaking. And then we're going to go and just ask them some open questions so that you can start getting some of the answers that you need. One of the things that I realized is that the very first person that I helped to acquire a property, she actually reached out to me because she wanted to move into an apartment. And I kept thinking, I wonder why is she looking for an apartment? I know she had gone through a divorce, had some different things that occurred in her life. And she just said, you know what? I don't think I can get a home. And I just told her, I said, listen, don't think that you can't get it. Think about the infinite possibilities if you could get it and what that would look like. And I said, I know we're sitting here talking about you going from one rental situation to the next for the past 5, 6 years that you've done that. Isn't it time now for you to go ahead and get yourself a home? Literally, you guys, within 45 days, this woman was in a completely gut rehabbed home that she loves today. Absolutely love. And then I was able to go around the next thing and get her daughter into a home. And so this is what we're here for. We must start to create legacies of love, start to build. It is better to own instead of rent, making someone else consistently wealthy. But when you own a home, you're creating wealth, okay? So I have a dynamic a panel. I have everybody's on here, I see. I have a dynamic panel of very experienced lenders that's going to ask, listen, if you have a question, you throw it in the chat. If it's something that we don't address, we want to remove anything that even kind of looks like fear, because there is nothing to fear in this situation. I've always said, even with all the lenders that we work with, and I love the fact that they don't say no, you can't move forward. It might be not now, but then they give you the tools, the information, and the education of what is necessary for you to get pre-approved at the right time. And so I want everyone to feel free to ask any questions that your heart desires, okay? And do not think that a question is a dumb question, because it's not. It is an educated question because you want some education. So you know the answer to that. So I'm super excited. So now I'm going to ask if we can have Mrs. Deborah Schlager to please show yourself today on the camera. Alma Orozco, and also Don Meadows. If we could take a look at you all, beautiful and handsome faces today. Thank you so much. Listen, this is the dream team in lending here today, guys. So I'm privileged right now to be in their presence. So I'm going to jump right in, guys. If we could start with Alma, if you could please just introduce yourself and tell us your name and how long you have been in the industry.
Hi, everyone. I'm Alma Orozco. I'm with U.S. Bank Home Mortgage right now, and I've been on the business for about, it's going to be 23 years now. I started out as a title insurance company agent. So I was a closer for a title company. And then I became a processor for about 5 years. And then I became a loan officer, junior loan officer / assistant. and then I became my own loan officer.
All
So nice
right.
to meet you, everyone. Thanks, and thank you so much for having me here. I really appreciate it, and I am so thrilled to answer any questions that you guys may have.
Thank you, Alma. All right, Deborah Slager.
Hi, I'm Deborah Schlager. I work for Associated Bank. I've been in the lending business for 41 years. I started in the business as a processor. I know, Alma, yeah, 41 years. I started as a processor and I was in the broker world, and now I'm back in the banking world. But processing, I had my own branch for a while, and the majority, almost all of, since I've been in this business, has been in the CRA, first time home buyers. And whatever questions, it's never no, it's okay, let's think how we can make this work. Let's get you into a house. You might not be able to do it like we said today, but we'll give you the tools and help you to purchase a home.
Thank you. Thank you so much, Deb. And so Don, Mr. Don Meadows, how are you today? I think Don needs to unmute, or somebody unmute him. That's okay. While we're getting Don to unmute there, I know technology, it always allows us to connect, even if we're on mute. Well, Don will be coming up very quickly with us. So while we're waiting, hello, I see Don is saying hello there. I'm not sure if it's someone that is a moderator, if you can unmute Don, that'd be great.
Yep. I think we're working on it right now. I'm sorry, Miss.
No problem. So listen, I see some questions already in the chat, and we'll go ahead and just do that while we're working on that. So listen, I see that someone put on there, are there any lenders that actually deal with HACC? That's the Housing Authority of Cook County. That is very similar, Deb, to the city of Chicago, I believe Chicago Housing Voucher, and I believe that I know for sure that Alma and Deb's both are experienced with working with those programs. Am I correct about that, ladies? All right, we got to mute.
Okay, so that is the CHA, but that voucher is for suburban CHA. It's not the choose to own. The HCAA, that is the suburban CHA voucher program.
Does your organ so
we
worked with people that are in the voucher program, right?
So here's the issue on that one. We have to be approved, and they're not. I've been trying to get a hold of them, Nicole, so we can do the loans with that program, but they don't have a list of approved lenders. So we just have to make sure that they qualify them the same way as the CHA choose to own program, that the voucher is used as their income.
Okay. All right, great. So as we were just going in there to take a look at some of the questions that's in the chat, I actually just want to start off from the basics, right? Because way too often, I believe that most people never take the steps towards home ownership because they believe already in their own minds, for whatever reason, that they are ineligible. So I would like for you all right now, if you don't mind, I'll start with you, Alma. Can you tell us what can a person come to you with for their package? What does a good package look like for you to look at to see if you can get someone qualified or not?
So in regards paperwork, documentation, typically I like to see pay stubs, recent pay stubs. A pay stub will tell me a lot about the client situation, the hours, the average hours they're putting in, if they're consistent, overtime, you know, if they have any outstanding loans against their 401k, which we have to consider, if there are any deductions in addition to the standard federal, you know, deductions. So definitely current pay stubs. W-2s, and if possible, the first 2 pages of their federal tax returns. We would like to see all pages up front, but at least the first 2 pages will be great, because that also tells me a story. Do they file a Schedule 1? Do they have any unemployment income reported? Do they have any Social Security or any additional income that we can kind of, maybe they are not aware that we can use it, but we can, help them utilize all of the income that can be utilized. From there, then we, those are the primary things. After that, it's pretty much their assets. I want to know what kind of assets do they have. Typically, any lender is going to ask for 2 months of their bank account statement. For initial pre-approval, it's great that you provide the 2 months, if not at least the most recent month, so I can take a look at the pattern. What kind of deposits are you doing? Are they a lot of cash deposits, a lot of transfers going back in and forth? Do you have any large payments? Maybe you're paying a car loan that it's not on your credit report, and that could actually trigger red alerts. So I try to look at all of that up front. So it's very important that you submit, pay stubs, W-2s, at least the first 2 pages of your 1040s, your tax returns, and your bank statements. And that pretty much will tell me a little bit of your story and your situation.
Okay, great. Thank you, Alma. Don, would you mind please introducing yourself? Thank you. And thank you for working with us through the technical issues.
I don't know if it was me having technology issues or not, but I logged back in. Hi, I'm Don Meadows. I've been in the industry it made 29 years on November the 3rd. I started as a real estate broker. I was with Century 21 Dabs, which is gone, back in 92. I was doing loans. I operated as the director of mortgage operations for a company called NACA. I did the CRA review for Bank of America and Citigroup. I'm currently the mortgage production manager at Regions Bank. And hey, Alma, I used to work with Alma at US Bank. But, I specialize in CRA lending, first-time home buyers. And, we're here to help, to educate folks as they come through.
That is awesome. So let's move right along about some of the basics, right? Because way too often people don't thrust forward into home ownership because they feel like they have barriers. And so they won't come in and take the time to pull the documents together and everything else. And so Alma was just explaining what a good loan package look like, some of the data, the information that you all need to look at so that you can make a decision about preparing a pre-qualification. So if someone provides you, Don, the taxes, their check stubs, their bank statements, and then you realize that they have a 580 credit score with a couple collections, what do you suggest to a person in that situation?
Okay, for us, it's about verifying what it is. What's causing the issue with 580? Why are they there? And a lot of folks get into the issue of worrying about how their credit is. You're not evaluated by your credit. You're evaluated how you pay your bills. So we're looking at this. Installment accounts are paid on time for the past 12 months, especially rental, because if they have too many derogatory standard accounts, we can use alternative trade lines. We look at their credit card utilization. If they have a high balance on their credit cards and they maintain a high balance, and the credit card utilization can adversely affect your credit score. So we have that conversation about where they are, how they're currently paying their bills, and can they keep their credit card utilization below 30%. And in some cases, if they're at 580 or so, and I see that their credit card is of $1,000 balance, they're at $980, I'll ask them to pay it down. I'll do a simulator to see if it makes sense, and I can rescore them at that point to get them closer to where we need to be to do an FHA or a conventional loan.
Okay, thank you. So Deb, one of the questions that we have in our chat is that my income states that I have a great salary, but my credit says something different, the score. So what do you all are looking for, Deb, in the scoring? of a person's score when they're pulling? Because I know it's different, right? If you're trying to buy a car versus a home, what are lenders looking for in a credit
The
score?
credit scores, well, we take the middle credit score. So we don't take the highest, we don't take the lowest, we take the middle credit score. And like Don said, though, if you don't have any credit, we can use alternative credit, such as rental, utility bills, car insurance. We look for the past 12 months. You touched on about collections. I advise do not pay off your collection, because when we run you through the system, it's called the desktop underwriter. It'll come back and tell us yes or no if we should pay, especially on conventional, if you should pay off that collection. What happens is if you pay off a collection, then it doesn't know the credit, it dings your credit, and it doesn't know that you paid it off. So it drops your score. So I always advise the client, do not pay off any collections. I'll let you know. And a lot of them are medical or they'll be older. So if they're older collections, they've already affected your credit a long time ago when they went on. So yes, I tell them don't pay off any collections. Don't start using your credit cards. And then we like to do a soft credit pull before I even do a hard credit pull, because this way we can tell you, okay, listen, we can raise your score. Let's pay down the credit card, like Don said. Or another thing is, if you have a high credit card and your credit score is on the fence, you can always call the creditor where you have your credit card. If you haven't gotten a credit line increase and you've paid them on time, you can always ask to have that credit card increased, as long as they don't do a credit pull, because that'll ding your credit. And that would bring then what you owe to the balance. It could also lower the utilization on it. That's
a really good question. That was a good question, and the great way that you answered it. I want to say that, a lot of times people, when they are going through this process, right, they may not have had a lot of credit. So I'm just wondering, even if maybe Alma, if you could step in and just tell us, so do you accept, so if I have a credit card and I decide to add someone onto my credit card so that they can get my credit card history and I have a very low balance on my card, tell me a little bit about that. How do you guys see that? Is that a benefit for people?
Having a low balance on the credit card, carrying a low balance, it is a benefit, because when lenders run your credit, we run your credit to gather two things. Most importantly, your credit score, what is your score? And then we also gather your monthly payments. So your required monthly payments. Some clients have a tendency to make different type of payments. They overpay or they pay it off every month, depending. So what we want to look at what your monthly required payment is. And based on your credit score and based on your total monthly payments, it's going to determine how we're going to qualify you or what programs you'll be qualifying for. If you're carrying 4 or 5 credit cards with very low balances, or even if you have 5 open credit cards but only one is carrying a balance, it's not a negative impact on your credit. Okay. If you have 4 or 5 credit cards carrying average balances, so let's say $500, $300, it's not a negative credit. It's not a negative impact, but we have to count that monthly payment that you're required to make as part of your total debt. So if you are a first-time home buyer and you carry more than a couple credit cards, you wanna, the smart thing to do is try to pay those credit cards down as much as you can, or pay them down to zero. Do not close them, just pay down to zero, because then that payment, it's not going to affect your potential qualification for a mortgage. Okay. Does that make sense?
That makes a lot of sense. Thank you so much. Don, I wanted to go a little deep with this one, okay? Because, way too often a person may even have a good job, right? And they got a great income, But you come to find out, when you start calculating up all of their debt, their ability or eligibility to purchase a higher price home actually goes down. Don, I just want you to tell us a little bit about how you all come up with the formula of what you will pre-approve someone on a basis of.
So when you're looking at qualification, it's called debt to income. So we're looking at the amount of monthly debt that someone earns, and we count their gross. We're counting their gross income, and most folks don't bring their gross income home, so we cap it at a certain amount so we don't exceed or affect their lifestyle. Because you can be mortgage, poor, paying a mortgage, can't afford to live. So we look at that as their debt to income. We verify, for example, if you had a $5,000 gross monthly income, we won't exceed $2,500 of your total. That's 50%. So your mortgage payment and every debt that's reporting to your credit report cannot exceed $2,500. And we use it as a benchmark to verify what they can pay on a monthly basis. 50% of your gross monthly income goes towards your housing payment, credit card, student loan, car note, or any installment loans. And we're looking at that minimum payment amount. And if it's less than 10 payments, we can eliminate certain installment loans to effectively see how much we can afford to give you. And in some cases, that's more than people want to pay. And in some cases, it's not enough.
Okay. Yeah, that's true. Deb, okay, so you know what? When I hear the word student loan, I really want to kind of scream and go fight the government a little bit, because, it's really, people go out to get an education, and then they say, listen, I've got a great education now, and I want to go out and get a great job. And then, right away, a lot of programs even allow for a person who secures a job right after college can even, or a certification program that they can actually, move forward with a loan, right? We're not having to wait 2 whole years in some cases. But a student loan debt, Deb, let's talk about the student loan debt, and let's be real about it, because a lot of the applicants have student loan debt, and it impacts the amount of money that they can get approved for. Let's have
student loan is very tough today, very tough. FHA, they changed it, whatever the principal. So here, if your loan is in deferment because of COVID, almost all the student loans were in deferment or forbearance. That doesn't matter. They take, FHA changed it. They take 50% of whatever the principal balance is as a monthly payment. Now with conventional, there's different programs. Fannie Mae will accept on a conventional loan, income-based repayment. So income-based, depending on what your income is, you'll have a letter from those student loan companies telling you some people don't pay anything. Some people might pay $50 a month. Because I had a couple clients and they had high student loan debt, like over 50,000. Well, that's low compared to some other people, but 50,000, and their payment was only 150. So student loan, it's very tough. If you have income based, that really helps. Otherwise, if there's no payment on the credit report, we have to take 1% on conventional if it's not income based, and use that as a monthly payment of the principal balance. And that could just knock you out of the box for home ownership.
Yes, it's true.
And it's bad.
Yeah.
It's bad because most student loan debt is at least 50,000. I mean, I have some clients, it's like 100, 200, 300,000. Who wants? Go ahead.
Mine is 240,000. I was in that same situation. So
right.
Yeah. So,
and even if they took half, if they took 50% FHA, how are you still winning? You're not.
No.
Yeah. So that's why I am on I work with an organization where we are actually fighting to get rid of the student loan debt and get it canceled out. So I'll tell y'all more about that later. But anyway, moving right along to the lending piece. One of the things that we have as a question out here, and I'll go back to Alma, is do you help clients with disputes? And would that be a soft pull, or do you have to go through the process? So you're on talking about how you normally send people through the process. And I also want to say something about that, because in my turn to own, they actually, we put you through the HUD counseling first, right? So that you can pull the soft pull, figure out where you are, and then the goal is to try to send you to a lender ready. But let's just say, Alma, that someone does, because you're a hard pull, right? Just talk about that real quick, how that impacts the credit.
Yeah, so we are now able to do soft pull. So I'm happy for that.
Okay.
Yay! We fought it and we got it done. So yeah, we can now do soft pull, but you are absolutely right. We were hard pull. So that really does affect your credit. It could lower your credit report anywhere between 15 points to 25 points. But the good thing about a hard pull is that we know exactly where you're standing. And this is what we're going to use to approve you. The underwriters are going to look at this and there's no turnaround. There is no what if. This is what we're going to look at it. This is what they're going to see. And they're going to come back and give us a decision based on that credit report. With a soft pull, you have to understand that it's not a hard pull. It's just giving us an idea what your score looks like, what is showing on your report. And then we don't run all 3 bureaus. It could only be just 1 or 2, depending on, what we're doing with the soft pull. But just understand, soft pull, it's not what the underwriters are going to be looking at and making a decision on that, okay? It could totally change. And I explained that because there's 3 major bureaus. So when we do a soft pull, we are going to run maybe 1 or 2, and maybe those 2 will have a credit score of 640, 680. And then when we do the hard pull, we're going to run the 3rd one, and maybe the 3rd one you're at 5 or you're at 615. So now, like Deborah said from the beginning, we're using your middle score. We're not using the highest. We're not using the lowest. We're using what the middle score is. So now you don't have a 620, you don't have a 680. Now you have a 615. So now we're going to use 615 to qualify you. Okay. So that's very important that you understand. A soft pull, it is not what the underwriters will be deciding, and what us, the loan officer, are not going to be using to qualify you. Okay, it's just so we can get an idea what your credit report looks like, what's in the report, and we can better assist you or guide you, to bring that score or clean up your credit. Okay.
All right. Thank you.
Can I ask a quick question, Ms. Willie? So one thing that I don't know if people still do this, but years ago, this is what I used to do, and I'm just curious, what's the pros and cons of it, or when we, as individuals that's looking to purchase a home, we just go from Home Depot, go to Bank of America, go to Chase, and we got like 50 people or 60 companies putting our credit left and right? Is it practical to say if I have a identity IQ, and I can print out my credit report and my FICO score, and then I can attach my W-2, and I can attach some check stubs and things of that nature, everything that I need, like creating my own package, and kind of shop it and say, hey, this is what I'm working with, and based on this information, what is an idea of what you can give me? And once the underwriter, whomever, look over and say, based on this information, I could do such and such, and then you can say, all right, let's do a hard pull. Does that sound like something in fairy tale land, or help me?
That's a free-for-all.
Yeah, that's a very, very fairy tale Disneyland kind of thing.
Okay, I'm asking.
No, the reason is we can, off the record, a loan officer can sit down with you go over that credit scenario that you bring us, and we can certainly sit down, go line by line and advise you or give you some pointers on what you need to do to clean it up or, make it look better, right? Off the record. But our underwriters will not look at a package unless we run a credit report.
Got you. Yeah.
So you have to get there ultimately, whether you want to get there right away. And honestly, I love the idea of having it looked at prior to that, right? And that's why it's important to go through the whole process. For all the people that are here today, the My Turn to Own have built and established a Wealthy Wednesdays process and also a HUD counseling 8-hour class that you take so that you can start to understand everything that's going to be needed, what it's going to take to be successful, so that you can prepare yourself. That, hopefully, and I'm sure Don and David, I want you guys to weigh in on this real quick too, is that when a person comes to you with their package complete and ready to go, I just want y'all to keep it real with us today. Do you really want to sit there and go through all those documents that Don just said, knowing that you don't have a complete full picture of their situation? Would you prefer that they go through the HUD counseling process and come to you prepared, ready to rock and roll? How do you all really want people to come to represent when it comes to preparing for a mortgage? And give it to them real done.
I would personally prefer them to get the HUD counseling. I've worked with the nonprofits for years. I participate with the Housing Authority of Cook County. I've done the City of Chicago. I've done with Naval Works. I like when they have the counseling because they have a better understanding of what the process is. And those, since COVID, they haven't been doing the one-on-ones the way they used to. But I like when they have that better understanding of what the process is. And then when we're talking to them, it's not Greek. They have a better understanding. It allows that we need paperwork. Your pay stubs will expire. Yeah, I gave you pay stubs. That was June. It's now November. I need new pay stubs. So they understand what the process is. So you won't hear the age old. I gave them that paperwork already. Yeah, 5 months ago, we did get your pay stubs.
People on the call now may be ready for January, right? And in February, if it gets to January, February, you're going to be needing 2021 taxes, right? 2020 and 2019 won't just be the 2 years that you need. You're going to need 2021 and 2020, correct?
Yes, that is correct.
Right. Okay.
Yes.
So I just want people to really understand exactly what it is that they need to do. So when they come to a bank, and what I love again so much about the My Turn to Own process is that they have strategically thought out each step that they can ensure clients success in, so that when we are presenting their information to a lender, then our chances of getting them approved are higher. So that's why they ask for you guys to complete a survey so that they can get a full understanding of where you are. Now, I want to talk about self-employment and also want to talk about bankruptcy because these are real situations, right?
Yeah.
Some people have been self-employed. Deb, what does a self-employed person look like coming to the table with you?
Okay, so with self-employed, regardless of what type of mortgage you apply for, conventional, FHA, you have to be self-employed for 2 complete years, 2 years. So we need your tax returns for 2 years, whether it's a Schedule C where you're a sole proprietor, or if you are have K-1s, because we have to look and see what your income. And we go not by the gross, because people tell me, oh, I'm self-employed and I make 50,000, but that could be your gross. Now you have a lot of, you write off a lot. So we go by the net, and there's certain things that we can add back in on your Schedule C that we could add back in to help you qualify and maybe increase your income, but we need the last 2 years. And then, yes, we will ask for an income and expense statement because we're going to see what you made for 2019 and 2020, but we also want to see what you've made this year so far, because we want to make sure that you're making money still for 2021. So we will ask for an income and expense statement.
Okay,
Yes.
thank you so much. Now, Don, if I could go back to you for 1 second, I want for people who have filed bankruptcy, I want it broken down from the chapter 7 and the chapter 13, because there is a difference in how lenders look at that information. Tell them if they've had a bankruptcy, how long is it going to take for you to decide that that has been on there long enough and it's okay for them to move forward as a new homeowner? What do those things look like when it comes to the bankruptcy? And what's the difference of the chapter 7 and the 13 when a person is ready to move forward in home ownership?
That's a good question. So the standard bankruptcy filing is the chapter 7. That's the forgiveness of all debt. I don't want to pay anybody back. I'm filing chapter 7. But the courts have now changed that they get to determine whether you can file chapter 7 or not. If you make a certain amount of money, let's say you made $80,000 a year and you have $60,000 worth of debt, they're not going to allow you to file a chapter 7. They're going to make you file a chapter 13 and work out something with the creditors to repay them. Because if they see you have the ability to repay, they're going to ensure creditors get paid something. They can negotiate a smaller payment, a reduction of debt, but you're going to end up paying the creditors. Chapter 7 will allow you to purchase 2 years after the date of discharge an FHA loan. Chapter 13 will allow you to purchase 1 year into the chapter 13, as long as you've had consecutive payments and authorization from the trustee, who is the court. And conventional financing on a norm is 4 years or greater after the bankruptcy has been discharged.
Okay, Don, so you're kind of speaking in Spanglish right now when you all are talking about, listen, when you're talking about FHA and conventional loans, like we really know the difference of those two and what they are and what they all are comprised of. I want what you all both, I want everybody to chime in really quickly. What is the FHA? Somebody tell me what the FHA loan is, how it works, and please, then someone else step in and tell me about a conventional loan. And is one better than the other? I want the third person to ask that question. All right, let's do this.
Yes, one is better than the other when you're negotiating. When you're negotiating a contract and you have multiple.
Talking about Deb, conventional FHA. What is the
conventional?
Okay.
A conventional loan, usually Fannie Mae, or at the bank, it could be their own like portfolio loan where you would pay. It's a loan that the bank has with certain down payments and closing costs, or PMI, private mortgage insurance, which private mortgage insurance is insurance that if you don't have a 20% down payment, you have to pay this insurance. It protects the lender in case you go into foreclosure. It keeps making the payment while you go through the foreclosure process. FHA requires PMI insurance. FHA, which is a federally insured loan, it requires PMI insurance. There's conventional mortgages for first-time home buyers out there where there's no PMI insurance, regardless if you put 20% down or not. So that's what PMI insurance is. You asked about FHA versus conventional. When you're in a
Deb, I know you're a conventional fan, but I want Alma to pause for 1 second. I want Alma, I want you to tell me about FHA and why do you think people should do that? And then Don, I'm gonna have you to step in about something else. So go ahead, Alma, because this is a FHA conventional fight right now. Go ahead, Alma.
Yes. So both of the programs are good, actually. FHA, it's a government secure loan. So the government is going to secure your loan. They're going to secure the lender investment. So they give you more flexibility. So to qualify you with a lower credit score, tight ratios. So we can push. The government secure loan is more risk driven. So they'll take on more risk. Why? Because they're charging you what it's called the mortgage insurance. So you're paying an insurance for the lender to take on the higher risk type of program. Okay. It's not a bad program. Some clients, it's the only program that they're qualifying. Why? Because they file bankruptcy and they've only been out of bankruptcy for 2 years, or, you know, their credit score, it's below, you know, the approvable credit requirements for a conventional program. You know, FHA doesn't require you to have reserves, which is the amount of your mortgage payment saved in addition to your down payment and closing costs. So they're more flexible, they take on more risks. So it's a really good program for first-time home buyers who need that type of risk criteria. Okay, so it's not a bad program. The good thing about FHA is that typically their interest rate, it's a little bit lower than the conventional program. Why? Because they have a higher insurance premium that you pay, so they lower their interest rate a little bit. Okay, so the conventional program, it's a very good program, but you do have to meet certain requirements. You have to have a higher credit score. If you just had a bankruptcy, you're not going to qualify for it, because typically they want 5 years. I know Don mentioned 4 years, but to be on the safe zone, you want to wait 5 years. With the conventional program, they have first-time home buyer programs. So for anyone who's a first-time home buyer, the minimum down payment typically on a regular conventional program, it's 5%, 10%, 20%. So with the first-time home buyer program, they're taking on a higher risk and they're allowing you to put 3% down out of your own pocket, or we can use it with down payment assistance. So
1 second here. This is good, right? Because people, and I want to go right here real fast because we're narrowing down. We only have a few more minutes left. But what I want to say is that, so for FHA, a person may have 3%. I know some other conventional programs that may have some similar and some that's a lot higher down payment. But Don, people think that when they just put down, when they say, oh, you guys, you only need 3% or 3.5% or 5%, that's all they have to pay. Let's talk about closing costs. And then I want to do some real quick, fast question answers before we wrap up real quick. Don, let's talk about closing costs, because closing costs fees prevent people from buying.
Hold on one second, Miss Wheatley. You listen, we could do this all night long. This is amazing. Right before we bring on Mr. Meadows, I would like to bring the president, Mr. Green, on. He has another Zoom call right after this talking about credit, and he's trying to prepare. He just wanted to jump on for 1 second.
All right, Jamal.
Hey, everybody. Thank all of you guys for really being a part of this. I want to really thank my good friend, Miss Nikki Wheatley over there and her team. This is just amazing. And please take this wealth of information. I'm talking low because I'm in gymnastics for my son. But, but please take all of this information that they're giving you guys, and just take something from this going forward and know what you have to do to start preparing. So when you come into contact with one of our housing counselors that are on our team, or one of our loan originators, anybody in this process, you will know some of the things already ahead of time. So I just want to thank everybody for being a part of this call. And I want to thank all of our panelists here who are giving you this amazing information. That's what My Turn to Own is all about. And of course, I want to give a big shout out to my chief of staff and my whole team that's on here as well. I got to go to the other Zoom in a little bit, and I'll let you guys continue. Thank you. Much love, everybody.
All right, Jamal, thank you so much. Young man with an amazing big vision, and have a dynamic team. Mr. Don Davis, Sister Africa Porter, Chrissy Williams, and so many other amazing people just adding to this team, because there's so many people that they have access to putting together. So I want to thank you all so much for all the work that you all do. Now, listen, as we prepare to wrap up today, I want to just go back and touch bases on a couple things. We said early on that it was important that you come to the table ready. So even right now, not knowing, am I 100% qualified? The greatest goal is to know that you now have the information to go out and pull. your last 2 tax returns, your bank statements, your check stubs. And what we're going to do is we're preparing throughout the Wealthy Wednesdays over the next couple of weeks. We have the realtors going to be there next week, myself included, and we're going to have an appraiser and an inspector and a lot of other wonderful things. And then this Saturday, we have the HUD counseling class. I know that Chrissy or someone is going to put that in the chat. You're going to get prepared to present yourself before lenders. And it's okay. We're going to help you get there by allowing you to have your soft pulls done, to go and try to fix any issues so that when you come to Alma or you come to Don or you come to Deb, that you are ready to rock and roll and thrust forward into home ownership. So these are things that you want to do. You got a lot of information today about the difference of a FHA and a conventional loan. And so, Don, because you were once a realtor and then also now into lending, I want you to, if I'm bringing an offer to you right now, right, for someone to buy a home that they like, I want this house is perfect for me. And they have an option to go FHA or conventional. I want you to just tell people, what do you think the seller's agent and the owner is looking at when they're presenting that offer? One of them FHA, one of them conventional. Give them real deal on this.
Well, as putting my agent hat back on, oh my God, from forever ago. So as an agent, if I'm selling the house, I'm asking my boss, one, who are they coming from? What lender are they using to come through this? Is it coming through a broker or is it a bank? Secondly, are they using a down payment assistance program, or what type of earnest money they're putting down? FHA deals normally have a stigmatism because the sellers are worried about the condition of their property. Because FHA will require them to do certain repairs. If the paint's chipping, it's got to be scraped. If the doorknobs are loose, they have to be replaced. That's one of the auspices of having an FHA appraisal done. It redoes the inspection report for the home. But if the home is a new renovation, gut rehab, I'm least worried. I don't have that issue. But I am leaning towards conventional financing with strong down payments when I'm looking at the contract, because if they're not asking for closing costs in this market, it makes me more comfortable as a seller. Because the reality of it is, this is a seller's market right now. And it's trending to stay a seller's market for another 1.5 to 2 years. And in knowing that, we have to ensure that our borrowers understand down payment and closing costs. The lenders are only looking at the bottom line, cash to close. Your down payment is 3% conventional, 3.5% FHA. Your closing costs normally range 2.5 to 2%, depending on the property amount and what city you're buying them in. So I look at all those as compensating factors when I'm weighing out a contract and comparing apples to oranges. Because if they can't afford to buy the house and they need assistance with closing costs versus another contract where they don't need it, that adds more weight to it.
Yes. Wow, you all have done a phenomenal job tonight. I am so super excited. Thank you, Alma. Thank you, Deb. Thank you, Don. Listen, we could have literally kept going on for about another hour or so here. This is some real good, juicy conversation. And I literally had about 20 more questions. But in the interest of time, we're going to get ready to wrap up this segment of the conversation. Please remember to sign up for the HUD counseling class that's going to be on this upcoming Saturday. And then as you heard this information today, go out and start pulling your documents together so the HUD counselors will be able to help guide you and prepare you so that you too will be able to exercise the option of home ownership. Because guess what? It is now your turn to own, right? It is your turn right at this point in this time. So I'm super excited. I'm Nicole Wheatley again. You got to tune in next week because I'm going to be one of your realtors on the panel, and we're going to walk through the whole real estate purchasing process. So I'm super excited about that. And I'm going to turn it over right now to Mr. Don Meadows. God bless you all. Thank you. And remember, it is your divine right right to possess a piece of the land, and you better go after it and obtain it. You cannot quit. You cannot stop. You are doing this for yourself and the legacy of your families to come. God bless you all, and thank you.
So were you turned over to Don Meadows or Don Davis?
Oh my God.
No, it's okay.
I'm all
Look,
excited.
it's okay. Look,
I'm all excited and Don, you know, Don for a little while.
I didn't know. I didn't know. Listen.
Okay, let me do that again. And then
No,
turn over to Don Davis and my turn to own.
Listen, I'm gonna tell you something. We all have a blast together, and that we have so much fun. I want to say thank you, everyone, for being a part of the My Turn to Own Wealthy Wednesdays today. You, the panelists, you all are phenomenal. I'm talking about. We hope and pray that we have the opportunity of having you all back one day soon, because I know you haven't even like really touched the surface of the wealth of information you all have. This is what I want to say though. Our next call. So people want to know, how do they sign up for the HUD counseling? So we have a link tree in our comments. Click on that link tree, and it should be an area where you can click to register for the class that'll be taken. We call it the info session that will be taking place the 13th. And our next Zoom call that's coming up from tonight from 7 to 8, where we're going to be talking about credit and how to position yourselves in any Q&As, a platform for Q&A that you may have. Feel free to join us on the next call. Ms. Wheatley, do you want to give some information how anyone can contact you if they're interested in moving forward with a real estate agent or anything of that nature?
Oh, absolutely. I'll throw it in the chat. You can reach me at 888-320-0266. And my email is steps, like you're taking steps to home ownership, steps Inc. consulting@gmail.com. I'm going to put that right there in the chat. And I'm really hoping that everyone will be on the call for next week, when we're going to go through all the steps of preparing to purchase, putting in the offer, what it takes when you're coming to start working with your real estate agent, and the inspection process, as well as the appraisal process. So next week is going to be phenomenal.
Wow, that sounds great. That sounds great. All right, you all have an amazing night, and we look forward to seeing you all next week. Thank you so much again, Ms. Wheatley. Good night.
Thank you all.
Thank you.
Thank you, Alan. Thank you, Don. Thank you, Deb.
Thank you.
Have a good night, everyone.
All right,
Good luck.
good night. Yeah, hello.